Is this the end of the greatest precious metals bull market in history, or the single greatest buying opportunity of our lifetime? Today is Monday, March 23, 2026, and if you've looked at your portfolio this morning, you might be feeling a sense of pure panic. We are witnessing what many are calling the precious metals bloodbath. Gold has broken below the critical $4,400 support level, and silver has just hit its lower circuit limit in global futures trade, plunging over 9% in a single session to hover near $61 per ounce. Just 2 months ago, we were celebrating silver's historic climb to $121. Now it has nearly halved in value. The news cycle is dominated by the escalating conflict in the Middle East and the oil inflation paradox. Usually war is good for gold and silver, but this time the massive spike in oil prices has fueled fears of persistent inflation, forcing central banks to hint at even more rate hikes. The result? A triple headwind of a surging US dollar, rising bond yields, and mass liquidations. But here at FortunePilot, we don't follow the crowd, we look at the data. While the weak hands are selling their physical silver in a frenzy, the underlying fundamentals tell a completely different story. We are still in the 6th year of a structural silver deficit. AI data centers and the global energy transition aren't stopping because the price dropped today. In fact, they are likely buying this dip behind the scenes. In this video, we're going to fly straight into the eye of this storm. We'll analyze why silver is being hit harder than gold, why the gold to silver ratio is screaming undervalued, and most importantly, why the current 96 Turkish Lira gram price in Turkey might be the last time you see double digits for silver in this decade. If you want to know if this is a crash or a discount, don't look away. The next 10 minutes could define your wealth for the next 10 years. The 66-to-1 ratio secret. To spot the opportunity, look at the gold to silver ratio. Currently sitting around 66, this ratio tells us how many ounces of silver it takes to buy 1 ounce of gold. This is significantly higher than the 30-to-1 ratios we see in true bull peaks, suggesting silver is massively undervalued relative to gold. Historically, when the ratio stays above 60 while gold is at record highs, a snapback effect is almost inevitable as silver rushes to close the gap. If we see a return to the 2011 ratio of 32 while gold holds its ground, silver would need to double from today's prices just to catch up. Silver is the lifeblood of the 2026 tech revolution. Even as manufacturers try to use less silver to save costs, the volume of global solar installations is overwhelming. But the real story this year is AI data centers. These new 800-volt high-voltage centers require 25% more silver for conductivity and heat resistance than previous generations. As generative AI workloads scale globally, tech giants are increasingly competing with investors for a dwindling physical supply of high-purity silver. This industrial demand is relatively price inelastic, meaning these companies will keep buying even as prices climb, creating a permanent floor for the market. The Silver Institute just confirmed, 2026 is officially the 6th consecutive year of a structural supply deficit. We are looking at a shortfall of over 67 million ounces this year alone. Mine production is stagnant, while industrial demand is skyrocketing. Since 2021, the world has eaten through nearly 1 billion ounces of above-ground reserves. COMEX and London vaults are reporting their lowest registered silver levels in over a decade, indicating that the physical cushion is almost gone. This creates a high-stakes environment where a sudden surge in delivery requests could trigger a historic liquidity squeeze. For my Turkish viewers, silver offers a unique dual engine for wealth. You aren't just betting on the global price, you are protecting yourself against the lira's fluctuations. With the USD/TRY sitting near 44.33, The local price of silver is currently around 96 to 98 Turkish lira per gram. This local pricing acts as a built-in safety net. Even if global silver prices move sideways, any devaluation in the lira increases the value of your silver holdings in local terms. For those living in Istanbul, silver has become one of the most effective tools to outpace the current 31% domestic inflation rate. How should you buy? In Turkey, you have two great paths. Digital silver accounts at banks like Kuveyt Türk or Ziraat Katalim or similar banks allow you to buy in grams with tiny spreads. It's perfect for liquid trading and automated monthly savings. But for long-term security, physical bullion from Kapalı Çarşı, Grand Bazaar is king. Holding physical metal removes all counterparty risk, ensuring you have an asset that exists outside the digital banking system during times of crisis. I recommend a balanced approach. Keep the majority of your active capital digital for flexibility, but ensure a portion is stored physically for true peace of mind. A warning: silver is gold on caffeine. It is volatile. We saw it drop nearly 50% from its January highs, a move that can be devastating for those using short-term leverage. This is not for money you need for rent or bills next month. This is for patient capital. You must be emotionally prepared for 10% daily swings without hitting the panic button and selling at the bottom. The key to winning in silver is understanding that volatility is the price you pay for the potentially explosive returns that gold simply cannot offer. Don't wait for $100 silver to jump in. Start your 1,000 Turkish lira monthly DCA dollar cost averaging today. Buy a small amount every payday, regardless of the price. Whether it's through your banking app or a small 1-ounce coin, consistency wins. By automating your purchases, you take the emotion out of the market and turn these 2026 price dips into your greatest accumulation opportunities. Over a 12-month period, this disciplined approach often outperforms the professional traders who are constantly trying to time the perfect bottom. Bank of America and JP Morgan are both maintaining bull cases that see silver reaching $135 per ounce before the end of 2026. Some extreme forecasts, like those from Michael Widmer, even suggest a path toward $300 if a true physical squeeze occurs. While these numbers sound high, remember that gold's move to $5,000 has reset the entire precious metals valuation model. As the ratio snapback begins, silver is the only asset class on the planet with the technical potential to triple in value over a single calendar year. Gold is your shield, but silver is your sword. In 2026, a truly diversified pilot needs both to navigate the stormy economic waters. As we watch the charts this week, pay close attention to that $65 support level. It could be the launch pad for the rest of the decade. Remember, wealth is built by those who see the value before it hits the front page of the news. Are you holding more gold or silver this month? Let me know in the comments below. This is FortunePilot. Hit subscribe and I'll see you in the next update.